all, I hope you are all well. I would like to welcome you all to the Fintech Finance Virtual Arena where we're hosting you today. Now, today is going to be a bit of a masterclass of how to maintain an incredible customer experience in financial services when everybody and everyone is currently banking from home. So first of all, I'd like to welcome our panelists. First of all, returning to the FF Virtual Arena is General FinTech legend Jim Marous. Jim, how are you doing today? How's everything going in Ohio?
It's going well. We're finally getting some much needed rain, but it's definitely summer.
Excellent. And joining us from the Netherlands is Peter van der Venn. I am pronouncing that right, aren't I?
Yeah, it's Peter Jan van der Venn, or PJ is also good. I'm a strategy director fintech at Mobiquity. And Mobiquity is a digital service provider blending strategy, creativity, and engineering to provide innovative and meaningful digital solutions to our clients.
How's things going in the Netherlands? You guys seem to be opening up and having restaurants in greenhouses all over the place.
Yeah, everything is luckily slowly opening up now. Just everybody still is careful, but things are opening up, and summer is starting, so that's also good for the restaurants, I think. So hoping that we can go back to normal quite soon.
Let's get straight into it, but I want to start right at the very beginning of the customer experience, of the overall journey, the onboarding. What typically are financial institutions struggling with at the early stage of actually getting customers to engage and sign up, and even before you really get to the KYC stage? What's the biggest challenge when it comes to the onboarding for the experience? Jim, do you want to kick this off?
You know, the biggest challenge, not in just in opening the account, but in onboarding too, is simplicity. We are still asking the consumer to fill in every blank of every form as if we're still doing it by paper. And when you look at the consumer that's now becoming more and more educated on how to interact digitally, especially during the COVID crisis, they're finding there's much easier ways to engage. Take Zoom, for instance. Why do people continually use Zoom when there's a possibility of some security issues? Because there's one click. Why do people like to use Amazon and other shopping services? Because it's one click. Why do people like to use PayPal integrated within payment processes? Because you don't have to fill in all the details about where you want things to be sent. So it really starts at the formulation in the back office of how you build the engagement tools. If you continue to make the consumer fill in every blank and do the whole process, it's going to take 10 minutes or so. And what's going to happen is you're going to have a lot of people that have a shopping cart that is basically abated. They're leaving the shopping cart halfway done. A lot of financial institutions think that that's going to be a way to get back to them, but by that time the consumer's gone someplace else.
Yeah, I totally agree to that. I'm actually in the middle of doing some research on onboarding processes at European banks, and it's amazing to see the difference also between the challengers and the incumbents. And you see sometimes exact copies of the old paperwork that's indeed online, and it's amazing that banks still can get away with it somehow. I think, and indeed, it's all about having a very good customer experience. I think that is key. This is the process of getting your clients in, and it is a process that has a high risk of no conversion. So the better the CX, the higher the chance, of course, to get your client in, and that he doesn't quit halfway of the process.
And it's much more than just moving to digital. It's acting like digital. It's being digital. And Bank by Marous will give a shout out to them. They did a great study of the UK fintechs.
I was about to bring those guys up. They're amazing.
Yeah,
those guys.
I mean, they did a study that we all kind of wish we had done, but the bottom line is they counted clicks. And now that's not the whole aspect. But if I don't have a pre-fill, if I can't start my name and have everything pre-fill after that, and all I have to do is, it's not saying that that's all valid information, but at least gives me a chance to change it or to fill in a phone number or something that may not be there. That's saving me a lot of clicks.
And there's all types of technology available these days. One of our partners, Jumio, who provides IDV services, they can scan the passport, get the information already in. You just need to validate it. Make it easy for your clients. I think that's the key here. And these days, people don't want to give information twice, or they don't want to give information that you can get somewhere else. and it's available. You just have to adapt to it and bring it to your processes.
If I can use a driver's license, as you mentioned, if I use a driver's license, some government ID, take a picture of it and have everything fill in and be able to use that if I need to do a credit bureau or something else, take it off my shoulders. Help me get through the process. Don't take old legacy processes and just make them digital. That's not being digital.
No, exactly. But there is, of course, a challenge for banks, and then maybe not for personal onboarding, but once you get into the business SME onboarding, of course, there's also a lot of regulation stuff that you need to know about the company, and that's always a challenge, right? To balance between what do you need to know, what is obliged to know, and where can you get it actually, and make the process as easy as you can. And some banks are really good at it, and that's typically the challengers or the smaller ones that do it. They have the digital mindset, they have the agility, they have the right technology actually to implement it, and it is possible. So why not do it? It's still, again, amazing to see. If you do a research among all type of onboarding processes in Europe, how many banks still have old processes, or not even the possibility to digitally onboard. It is, the digital part ends up, click here and we call you back.
Or I'll tell you what, do the whole thing digitally, but then come in and we'll do the KYC, or we're going to do the funding, and you just go, you're not digital. Let's define. What's interesting, we did research for the digital banking report. We found that 70% of organizations said they had digital account opening. 3 questions later, we said, how many of you have to require the consumer to come into the branch to finish the process? 70% of those said they do. Well, I get, okay, well, 70% of 70% just lied. So, and the reality is, what that gets down to is less than 20% of organizations pre-COVID, and now we're doing another study right now to find out what the update is, but pre-COVID, you had less than 20% of organizations had end-to-end digital account opening.
I think, and correct me if I'm wrong, I think it was Tinkoff Bank that, as part of the regulations in Russia, they could do everything digitally, but they needed to have like a physical photograph of the applicant. So they had a network of people on scooters that would turn up within about 2 hours, take a photograph, and then drive on.
Yeah, but that's a nice way, because if regulation tells you so, then of course it's hard to not do it, and you have to find a way around it. But this is a great way, of course, to get around it.
Well, we are obviously in lockdown. We can't go to the branch. We probably can't have guys zooming by on scooters. The only way to really open an account now, in this current climate, in this unprecedented time, I use the U word, is digital. So everyone is trying to do that at the moment. Everyone's trying to be the best. What are the opportunities there? What are the opportunities to wow? The example I got to give pre-COVID, and it's a great example because you can't apply for an account now, is Marous in the UK, because I think I did the our friends at 11FS podcast, and I opened a Marous account while live on the air, and it was seamless. It was incredible. It wowed me. So now that we're in lockdown, what are the opportunities to wow people during the onboarding experience?
Well, during lockdown, it's the same thing. It's again getting to the point. How am I going to be able to open an account with one click? And maybe you can't get to one click, but how can you minimize the process? We're seeing the fact that organizations of all types, both in financial and non-financial, are doing it better and better. But the way to wow, or at least make it so you don't have as many people abandoning their shopping cart, is to make it simple. And Marcus, my podcast, Banking Transformed, we just interviewed the head of brand and marketing, Dustin Cohn, from Marcus today. And, basically they set up the entire organization around the consumer experience. They're not adding services until they can do it right. So they don't have a checking account yet, but they have a savings account, they have a lending account, they obviously have Apple Card. They're going to soon have a loan package around the Amazon merchant. But they're going to make it so that every step that's not required isn't in the process. And unfortunately, financial institutions, many times in their mental state, look at the worst case scenario, what could go wrong, and then they build for that, as opposed to saying, American Express Platinum Card, ask for my name, my social security number, my government ID number, and my cell phone number. The cell phone number is simply used to get back to me by text as to whether or not it's approved. But if they need more information, they'll come back. but they can get my credit bureau and everything else with my name and social security number. The process takes less than 2 minutes. That, now mind you, it's a credit card, but when I go back to Rocket Mortgage in the US, if Rocket Mortgage can have an application for a mortgage done in 5 minutes, don't make me take 10 minutes to open a checking account or a current account.
Yeah, exactly. I think that's definitely key. Keep it as simple as you can. But of course, great CX is important. But there's only one way also to measure it. There's also ask your client. Of course, get it live, but also listen to the client feedback. Measure. We sometimes add data analytics to these kind of processes. When we design these processes, we make the points where you can measure, so you can actually learn and get it better. Measure again, make it better. And I think that's also really important. Of course, there's a lot of experts, and I think there's a lot of learnings that we have, but there's always a time to learn again. And the best thing to do it, I think, is listen to your customers, get the feedback, incorporate it, and adjust. But again, that you need to have that flexibility within your organization. It needs to be in your mindset. It needs to be in your culture. I think this is the key of making it better and get close to what your clients want.
Your point about measuring is important because you can measure at what point in the process a person drops out. You can understand their tolerance for pain. And especially when you do it digitally. When you do it in person, you can't. But if you do it digitally, you can find out exactly at which step does the consumer say, I've had enough. And part of it also is it's not just about the clicks. It is about the humanization of the process. How do you bring the human into the process if the consumer wants it, if the customer wants it? Or how do you make the integration and the digital experience more human? And sometimes it's personalization. Sometimes it's just making it easier and having some dialogue with the consumer as they're doing it to take it to the next level, which is beyond just digital.
Yeah, exactly. Because one client is not the other, and some are very good in adopting these technologies. Some are really comfortable with making a picture of their driver's license, and other might need another type of service, right? So if you have that also as part of your process, then you can also adhere to those needs.
I would love to see some of the outtakes of the "my voice is my password" type ones that people have been using. With that in mind, and looking at the Built for Mars study, because that is just a phenomenal litmus test of number of clicks.
Yeah.
What are some of the other metrics, for want of a better word, that banks should look at? I know it's very hard to put customer experience in a series of numbers, but what are some of the other elements as well, as opposed to just sheer number of clicks?
Yeah, I think there's a lot of them, and the number of clicks. I think it was a brilliant. Well, I don't maybe know what to call it study, but it's great information, right? And you see the difference between the challengers and the incumbents, and of course, clicks it says something about the efficiency of the process, making it simple, getting rid of the stuff that you don't need. So I think it's a very interesting metric to start with. But of course, I think there was also the same type of study that said how many days does it take to get your active account actually, because maybe it just takes a few clicks, but then you still have to wait days and days to get your account or get your card or those kind of things. That's, I think, an important metric. But the other one, I think we also just touched, what do your clients think? How happy are they? How happy are the clients that actually did the onboarding process? Conversion says something, of the 100 that start a process, how many end up as being a client? I think for the bank and the business of the bank, that's a key metric.
I think that's exactly right. The post account opening, you say, are they really customers? We make fun of a lot of the fintechs sometimes talking about the fact that they claim all these customers and saying, okay, is it a primary or secondary account? How much activity is it? Are there really 3 deposits, 3 withdrawals a month to make it so that it's actually being engaged, or is simply being used for one purpose where there's maybe only 1 deposit and no withdrawals? The engagement level, because at the end of the day, if you don't really have the customer's main account or one of the primary accounts, you really don't have a customer. You have a field, and it doesn't give you value. Mind you, if you were Amazon at the beginning and all you're trying to do is say how many people can I get to sign up, that's fine, because they made the experience so easy that once they signed up, they knew they'd get them eventually. That's not true of the financial institution. You can sign up for an account at 5 different institutions, but unless they really have a good onboarding, unless they build dialogue with you, unless you actually use the account, I just got a check back from one of the fintech companies I opened an account with. I think I maybe had 3 transactions, and the account went dormant. They gave me back a check. Well, how long was I counted as a customer?
Back up. You got a check from them.
A digital check. Yes, I got money back. Yeah. Good point. Yes, but it was in the U.S., so it still has a check theme to it.
Well, we mentioned obviously some of the new Marcus obviously being a fantastic example, but a lot of the large organizations, they do have a lot of legacy, but Goldman and Marcus prove that really isn't an excuse. So if you're a big, large high street bank, a big, large multinational bank, what's the change in the way that you have to culturally look at your customers compared to a more agile fintech? So, for example, one of the small banks like Starling, Anne is very much hands-on with dealing with customers. The amount of people that she's tweeted herself directly is incredible. You cannot do that if you're Bank of America or Wells Fargo or ICICI or whoever. What's the different sort of strategic approach you have to take when you have that level of scale?
Yeah, it's interesting to see, of course, that the larger banks, they have the customers, they have the huge customer base, right? They have the money, but they typically indeed lack the agility and the technology that the smaller banks have. So in principle, it should be a very good combination of both of them. And that's, I think, also why some bigger banks are buying these smaller ones. But I think what you also see is that the smaller ones focus indeed way more on CX and customer experience, and are very good at that. And that's a big USP, of course, for these type of companies. But what you typically still see is that the bigger banks, they got the trust. And that's still hard to overcome. I think many of those challenger banks, like Revolut, the accounts that they have are secondary accounts because customers still have their primary account at a high street bank. And that's also what you actually see happening. Some research that I saw that the channels are having a hard time these days because in these times with the pandemic, people tend to go back to what they trust. And this trust is still a key asset of those bigger banks somehow, and that's, I think, also still why they get away with not having the best CX or not having the best digital capabilities. But there must be a turning point somewhere. So I'm also really wondering, Jim, how you look at this.
Well, it's interesting because it really gets down to good data analytics, because what I want is a personalized experience. The technology is in place, the digital transaction capability is in place to make it so that you really talk to me like an individual. And if you do that, it doesn't matter what size organization you are. It doesn't have to be a person texting me or communicating with me in my email box, but on a day in, day out basis, are you tracking my behavior? Do you know who I am and how I'm transacting? In the COVID crisis, have you segmented your customer base to those customers that are just doing fine, at least based on their transactions, who may be in trouble? Did they defer payments on lend? Did they take advantage of some of the things that were put in place to ease the burden on the consumer? Did they take advantage of those? Or are they in trouble? Are you starting to see balances on credit cards rise exponentially? They're hitting all kinds of limits. They're having overdrafts. They're not paying their full payment. Those people have to be handled differently. And if you don't handle them correctly, the risk of default and risk of them looking at you and going, you didn't care about me, so guess what? I'm not going to care about you. I think the COVID crisis has really heightened the awareness of who's on my side. My financial institution, I'm saying it on too many of these podcasts, but my small business institution, was reaching out to me monthly, wanting my retirement funds before COVID. Once COVID hit, now one communication came to me that was personalized saying, do you need help in getting any type of emergency funding for your small business? Not one. And the one communication I got from the bank was not personalized and said, if you have not signed up for online banking, please do so today. I'm sorry, if you don't know that about me, which, by the way, I was signed up, but you keep on stumbling, and I'm not looking for this stuff, but I'm going, I took care of it myself, but at some point somebody's going to say, were you on my side? It's as simple as keeping up to date on what's going on. Amazon and most big box delivery services, if a package was running later than what they had projected at the very beginning. They notify you and say, we're running late. Let us know if you want to change your order or if you want to do something differently. When your groceries are ordered by a digital tech, a company that does it digitally, they start getting used to your habits and saying, by the way, is it time to reorder X, Y, or Z that you've been reordering on a regular basis? Can we simplify that for you? Consumers, again, are becoming aware of what you can do with personalization, with analytics, to make it so that you're thinking on my behalf. And oh, by the way, if I go into a store and you can keep track of what I'm doing and you can reach out to me and go, by the way, if you're going to buy something here, we have discounts at this store, which they can do. I now say, you know, that's another reason why I should stay with the company I'm with. Again, it gets down to, are you looking out for me? Are you rewarding me? You know, are you on my side?
I can't have you saying that, Jim, without bringing up big shout out to Nationwide Building Society, who's following the comedian Joe Lycett's trolling of them, have now had to deal with a lot of people using them to settle any arguments because their slogan is on your side. So I'm messaging them saying, I think coriander cheesecake is a great idea. My wife disagrees. Are you on my side? And of course they come back saying, we are on your side.
Another example are the auto insurers who proactively said, you're not driving as much. We're going to lower your premiums, or we're going to rebate the premiums you've already paid, because from March to May, we realized the amount of traffic has gone down. You're not driving as much. We're not going to be paying out on things. Well, that's a small issue, but it's a big message. And how can I do more of that? Again, it's common sense, but most people would never come back. My son's school came out and said, oh, by the way, we know you lost your last semester. We had to do it virtually. Can you give us an idea of how much you spent in how much money you lost in having to learn digitally, virtually? He put in his rent money for 3 months. He put in his travel between Cleveland and his school in. They gave him a check for that. I'm sorry, a check again, but they gave him a rebate on his learning for things that he had to have that was over and above what would have been needed had he known it was going to be virtual in the beginning. Again, sends a great message. It's not the biggest deal in the world, and it's something that's not going to cost you a whole lot to do it right.
With that in mind, I've got to talk a little bit, and I'm sure this is going to be the kind of regulation that will be worldwide soon, but got to talk a little bit about open banking. Lida Gliptis came up with a term which I absolutely love, where you have your main bank and then you have your mistress bank. With the likes of particularly the big high street banks, certainly in the UK, having the opportunity to add in other different bank accounts so you can see all your licenses on that one bank's platform. What does this mean for the experience of the future, the fact that you can have all of your banks in one? What does that mean for, again, the mistress bank?
Yeah, I think, of course, open banking provides opportunity, but also threats for everybody, right? And I think having great customer experience and having a great app that brings it all together in a very good way will be important, of course, to become that winner, because you don't look at your mistress bank anymore if you only go to your main bank. But the other way might also be that the mistress bank has a way better possibility to providing all the information of the main bank, and even better, it can also be a non-bank who does that. Aggregation you can do also by not being a bank, and then you might also lose trust. But I think time will show where we go, because for me personally, for instance, it's also like it's so easy to go from app to app on your phone. It's not that you go to a different bank. It's just one click away, and yes, it is helpful to have it all in one. But I still go to my banks to do the transactions at my bank. But that's also because, of course, PSD2 is now limited to just seeing the most of the data and not doing all the transactions that you want. But of course, once it has more functionality, the risk gets higher that you don't connect anymore to one of your banks.
Yeah, I think it's not going to be which one's your main bank and mistress bank eventually. It's going to be, what's my gateway bank? Which is the one that's giving me the gateway to all my financial services and things beyond financial? So there's a lot of services that would love that opportunity, but at that point, is my gateway bank Google or Facebook or some other service altogether where they don't have to have all the banking services? They simply are the way to get into them. Because, just like accounts, I don't pay attention to my accounts. I kind of pay attention to the way they interact. Does my savings account transfer to my loan account on a payment day? Or if I run low on my current account, does my overdraft account kick in to be able to take care of that? Well, in much the same way, other organizations be able to do the same thing. That becomes automated as far as my overall financial concierge, so to speak.
Excellent. Well, the last thing I want to touch on is going slightly back to legacy. When the likes of Bank of America were installing their systems, they weren't thinking, "Oh, we're installing this just to keep it going." Similarly, today, people are not looking at their systems going, "Yep, this is the future." You've got to look for 10, 15 years in the future. You've got to future-proof. How can a bank, again, future-proof themselves for the huge shifts in demand of their customers? It's kind of nuts thinking back to turn of the millennium, what customers expected from their bank compared to now. So how can they make sure that they're ready for 2040?
Well, from technology perspective, I would say they have to make sure, of course, that they can easily adapt. I think that's evident, right? But the big question is, how do you do that? And there is there's a huge ecosystem of all type of services available, and I would say lever that type of services. So make sure that your technology is set up in such a way that you can easily connect to those kind of services and use them, and also disconnect and use other ones if they get better. And I think that's from technology perspective, of course. But I think, as we all know, technology legacy is one, but organizational legacy is probably even worse. If you don't have the culture of innovating continuously and adapting continuously, then technology is not just a solution. So it's also all about adapting your organization, and that's, I think, an even harder challenge than just adapting the technology.
That's exactly right. The president of Lemonade Insurance said it really well. He goes, "The biggest enemy of digital transformation is legacy thinking." And Ali, I'd love to say, what do banks have to do to go ahead and be ready for the future? They got to catch up first. If you're not truly digital, we've already seen this. COVID hit completely unexpectedly. We've been talking on these kind of shows and others forever about you've got to become digital. You've got to become digital. Those organizations that were the furthest along the digital curve were the most prepared for the unexpected. Were the most prepared for the branch completely shut down. Now what? Those who were faking digital, those who really weren't fully digital, those who replicated paper systems with automated systems and really not thinking digitally, had the biggest hurdles to move to the next level. If you are a Marcus, or if you are in many cases, Bank of America, or a Acacia Bank, or a Denise Bank, or you go down the list of all these organizations that have really become BBVA, who really are digital, they are the most prepared for the unexpected. They also can adjust and move very quickly, agile. I think, those financial institutions that really want to look and see how it's done should probably open the airwaves to what's going on in China. I mean, you got WeBank, you got Alipay. These organizations are built from a digital structure out. As a result, I was lucky to visit WeBank in January before everything fell apart, but WeBank basically built the digital mainframe. They can test different innovations on real live computers because they have so many backups in the digital world that they can take one of them and say, well, let's just replicate what reality will be. And they're doing 20 to 30 updates a month, when most financial institutions in the States and probably in the UK, you're looking at every 6 months to a year having a quote unquote major update. I think the key is going to be, first you need to catch up. and really, really restructure your organization from a digital perspective. Because that will help you, by the way, even in a branch environment. It's not going to hurt you. So that's good money invested. But that's the only way, because we are going to have other surprises. Hopefully not as drastic as COVID, but we're going to have other surprises. And the person who's going to bring them on is the consumer. As you had mentioned that, Peter, that basically the consumer is going to be the surprise. They're going to demand more and more. And it's not going to be driven by what some other financial institution did someplace else. It's going to be driven by what a retailer, what a restaurant, what a hospitality company, what an airline has done from an identification perspective or from an engagement perspective.
Jim, you have to mention disrupt yourself. You got to say it. I was hoping I had it on a sticker down there, but you got to say disrupt yourself.
You do. And you'll get back to Peter's comment about culture. Organizations internally, people have got to disrupt themselves. That is why I believe the organizations at risk right now are your mid-sized, mid-level financial institutions and mid-sized, mid-level fintechs. On the fintech side, funding has gotten pretty tough. And if you're running a pretty big shop but don't have that VC funding, you're running out of cash. So that's a difficult situation to handle. So you're going to be looking for partners. But if you're a mid-sized traditional financial institution and you have legacy people that have come up the ranks and have been moved up the ranks because of their legacy time with the company, that's the worst thing you can be doing. And maybe right now, with the whole world looking at equity, diversity, gender, putting more women and people of color within organizations. The financial services industry is the furthest behind, I believe, of most industries in doing that.
Yeah, sure.
This is a good call to action because they work together. You bring in new blood that have new thinking, they have great ideas, that have been educated in digital technology. The last thing you want to do is put them through a legacy onboarding program of 2 to 3 years learning how we do things. No, I want you to teach us how we should be doing things, not the other way around.
Yeah, that's great. I think one at the Challenger Bank in the Netherlands here, they had, I'm not sure if they still have it, but in the beginning, you were not allowed to work there if you came from a bank, because then you have that mindset legacy. You have to come from a different industry, and then you are allowed to join. And I think that's the greatest thing to do, to get into something else.
These guys, right?
That's the one, I think. Yes.
Excellent. Well, guys, thank you so much for taking the time to speak today. Where can we find out more about you, and where can we next see you?
That's a question for Jim.
I'm pretty easy to find. I'm writing twice or 3 times a week on the financial brand. We just published a brand new digital banking report on the future of work in banking, which is actually available for a free download. And every Tuesday morning, 6 a.m. U.S. time, we have another episode of Banking Transformed podcast.
Okay, great. Yeah, and about Mobiquity, of course, you can find definitely more on our website and on our social channels, and of course on my own LinkedIn. There's also more information to be found.
Brilliant, excellent. Thank you very much, guys. We'll see you all soon.
Thank you.
Thank you.